Hey guys, welcome back to the channel. Hope you've all had a good New Year and Christmas break. Hopefully you've been able to spend some time with, family, friends, and now you're ready to smash 2023. As always guys, be sure that you're following the Instagram and also join the Discord server. I've recently created a new VIP section within the Discord server. Don't worry, the name, isn't confusing. It's completely free. All you've got to do is message me to join. The reason I've made it that way is because I want people to be active within the server. I want to know that people are, going to be really benefiting from what we're sharing, and it's a really good space to, build a community. There's lots of other traders in there that, we've starting to build some really good relationships with. Within the Discord server, I'm now sharing my daily forecasts. I'm giving trade analysis. I'm doing trade recaps, and I'm even sending signals for all the trades that I'm taking on my live funded account. So be sure to check it out. So in today's video, I'm going to be taking you through my favorite SMC entry confirmation. This is an entry confirmation I actually use myself in the live markets. It's based on market structure and a bit of supply and demand. And so to take you through it, I'm first going to take you through some basic market structure. You guys will probably be aware of most of the stuff I'm going to go through, but it really helps to understand the strategy. And then I'm going to give you an example, sort of a line graph diagram example of the entry confirmation. And then I'm going to go through a live market example. It's going to be a bearish example. You've obviously got bullish examples you can use as well. Throughout the video, I do mention that I'm going to show you a bullish example, but after I recorded this video, I sort of realized how long this video was going to be, so I decided to leave it out. If you guys want me to give you a bullish example, just let me know in the comments. I can always, re-record an extra live example to add to the channel later. But without further ado, let's jump straight into it. So guys, before we get into the model and I take you through my different entry requirements, I'm just going to go over some basic market structure. Now I'm sure most of you will have come across the concepts I'm about to go through, but I thought it was really important that I just go through them again, because if you don't understand these concepts, you're really going to struggle applying this entry model in the live market, and you're pretty much going to be entering at any random point and find yourself being stopped out a lot and having a very low win rate, which is not what you want. So back to pure basics, we've got a bullish market and a bearish market, and they're the two different markets we can find ourselves in. Obviously we can have ranges as well, but if you're just looking at trends, you've got bullish, which is the uptrend, and bearish, which is the downtrend. And I'll just take you through the bullish market first. So when we're in a bullish market, the first thing we'll find is price making a strong sort of impulsive move to the upside, as you can see. After we've had this leg to the upside, we're always expecting a retracement, which was what will come next. And after we've had this retracement, the first thing we can do is mark out our higher high. And this is pretty much going to be the highest point of that leg before the retracement started. So obviously in this example of the diagram, we're going to mark the higher high as this point here. Now, after we've had the retracement in a bullish market, we're expecting price to react from some level of demand within this leg. Once it reacts from the area of demand, we can expect price to push on higher, as it does here, make a break of structure. And once we've had that break of structure, we can then confirm our new higher low. And the important thing is that this is only confirmed once we've had that break of structure. And the higher low is pretty similar to the higher high, but it's going to be the lowest point of the retracement within that leg. And again, for this example, the higher low is going to be marked out at this point here. Now, after we've had that break of structure to the upside, we're obviously expecting a pullback again. So one of the first things we can do is mark out some demand zones that price might react from. One of the most obvious demand zones you're going to be able to identify is the origin demand, and that's going to be the demand around that higher low that we've just marked. And as you can see, we can mark out the demand just like this. So we've had our break of structure to the upside, we're expecting price to pull back, and we've marked out a zone that price might react from. So now as price starts to retrace, as we expected, it's come down to our demand zone. The first thing we can do now is highlight our next higher high, and this is again the highest point of the swing leg we've just had. So in this example, it will be this point just up here. Now we've come into our demand zone we've marked out. We're expecting price to continue bullish, react from this level, and make another break of structure to the upside as we get here. Same as before, first thing we can do after we have a break of structure is mark out our new higher low. And in this example, again, it's going to be this point just here, the lowest point of that retracement within that swing leg. And yeah, same process again. Once we've broken structure, we're expecting price to pull back. where might price pull back to and then make a reaction from. Good area is always the origin of that swing leg and the higher low within that retracement we just had, so we can mark that out just as we did earlier. And yeah, and then price will, ideally pull back into this level. We can mark out our new higher high as we just have, and we can expect price to react from this level and continue to make another break of structure, form another higher high, and continue that bullish market. So as we've seen, a bullish market is a series of higher highs and higher lows, typically mitigating areas of demand on the way. And a bearish market is very similar, just the flip side of that. So we're going to be making a series of lower lows and lower highs, and yeah, I'll just show you how that works now. So just as the bullish market started with a strong impulsive leg to the upside, a bearish market is going to start with a strong impulsive leg to the downside. Now, after we've had this leg to the downside, as always, we're expecting a retracement. And once we've had this retracement, the first thing we can do is mark out our lower low, which is going to be the lowest point of that leg we've just had. So once we've had our retracement, we're expecting price to react from some level of supply within this bearish leg. And once it reacts from this level of supply, we're expecting price to push lower, make a break of structure as we see here. And again, similarly to the uptrend, in a downtrend, once we've had a break of structure, we can then mark out our lower high, which is only confirmed once we've had that break of structure. Once we've had that break of structure to the downside, one of the first things we can do is anticipate where price might react from on its retracement, and same process, very first thing we can do is mark out the origin of that next swing leg we've had, which is again going to be the area of supply that stepped into the market to create that lower high. And as you can see in this example, it would just be this area marked out here. So as price starts retracing back to this level we've marked out, we can then mark out our new lower low, which is this point here, again the lowest point of that leg we've just had. So price is now retraced back into that supply zone that we had marked out. We're expecting price to react from this level and continue that bearish market, and to do that it's obviously going to have to break structure again to the downside, which we see here. Same process, after a break of structure, first thing we can do is mark out our new lower high, which is the highest point of that retracement we've just had. The next thing we can do is mark out some zones that price might react from. One of the easiest zones to identify again is going to be the origin of that swing leg, which is also the supply that stepped into the market to create that lower high, which we can mark out as this zone here. Now, when price is pulling back to this zone, same process. Next thing we can do is mark out the new lower low that price has just formed, which will be this point here. And again, if we're going to continue this bearish market, we can expect price to react from this area of supply, and it's going to, continue down, make another break of structure, creating that lower low, confirming our new lower high, and yeah, continuing the bearish market or downtrend. So now you've hopefully got a good basic understanding of market structure, we can go into the actual trade model and I can take you through my different entry requirements. So for the example I'm using, we're going to be starting off in a bearish downtrend, and obviously as we just discussed, the first thing that's going to start with is a bearish move to the downside, as we can see. And after we've had this bearish leg to the downside, we're going to have the retracement that we're expecting. And once we've had this retracement, again, the first thing we can do is mark out this new lower low we have. Now, just as I was saying in the previous examples, after we've had this retracement, we're expecting price to react from some area of supply before it continues down to break structure, and we can then mark out our new lower high up here. And this was the main reason I was sort of taking you through basic market structure, because it's pretty integral for the actual setup that we're about to go through. So guys, once we've had that break of structure, as we were doing in the previous examples, the first thing we can do is look for some areas of supply that price might retrace to and possibly react from to continue this bearish structure. For this example, as we've only got the line chart, I'm still going to keep to just showing you the origin supply, as it's the easiest supply to mark out and typically the strongest supply that will hold. So obviously in this example here, we would have this level of supply. Once price starts retracing, as always, we can then mark out, our new lower low. So one thing I just want to note now is when we're looking for these types of setups and price is pulling back, we don't really want to see price pull back with a huge amount of momentum, sort of creating this V shape as we can kind of see now. And when we see a V shape in the market, when you see that V, think of volatility. And this can sort of imply that price is coming back with a huge amount of momentum, and it makes that zone sort of a bit less high probability. You may want to look for some extra confirmations Obviously it doesn't mean the zone won't hold, it just means it's a bit more risky taking a trade directly from that zone. So that's just something to think about, when you're trying to play from these retracements, catching the new lower highs. You want to see price sort of build up a little bit rather than come back with a huge amount of momentum, because that sort of suggests that a large amount of demand has stepped into the market, and the market could possibly flip to bullish in this example, and that's not the type of market you want to be getting involved in at all. So when we're looking at these sort of retracements, we want to see some internal structure form, and in this example, as we've got the bearish swing leg, we want to see some bullish internal structure coming up to the zone, and ideally it will look like this. We'll have our bullish leg in the retracement, so this is just an internal leg, it's not a swing leg, but we've got that move to the upside, we've got our retracement, we've got our break of structure, but it's just an internal break of structure, so it doesn't have as much significance as a swing break of structure, but they're still valid. And as always with our swing structure, after a internal break of structure, we're expecting a pullback to some sort of level of demand, as you can see here, where we will then get our next break of structure and price will continue up, mitigating these areas of demand. And this is actually a very important concept that I will explain in a bit more detail in a second. But when we have a series of demand mitigations coming up to a supply zone, it can give us a bit of extra confidence that if price is going to react from this zone, we're going to get a very strong reaction, because there's not going to be any demand left in these areas. And this is where you see price just react from a zone and smash through. You'll see a really, really strong reaction, really impulsive, and yeah, that's just an extra confidence, but I'll get into a bit more detail about that in a bit. The most important thing here is that price hasn't just come straight back into this zone with a huge amount of volatility, because that can make, as I said previously, make the zone a bit less high probability to trade from. So we've got our bullish internal structure, and as we were talking about the bullish swing structure, we're having a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And the most important thing is that when price is pulling back to these demand levels, as it has now, we're expecting price to continue up and make that break of structure. So we have our swing bearish structure, price is pulling back to our supply zone, and in the process of this pullback it's created a bullish internal structure, and this is where price has just tapped into our supply zone now. So in the live market, this is the time where I would be jumping down to my sort of execution time frames, my lower time frame, and typically this is M1. This is the time frame I usually trade on, but you can obviously use this setup on any time frame you want. The key thing that we're looking for here is a sort of confirmation entry. This is usually how it's described. Most people look for a change of character. However, I want to see a bit more than just a change of character, and I'm just going to take you through that now. I'll explain the different steps, all the different things you want to be looking for, where you'd place your entry, where you place your stop loss, and I'll just go through that now. So price is now tapped into our supply zone, but we have our bullish internal structure. So this bullish internal structure could obviously continue. We could, break this swing lower high we have and price could flip bullish. But as we're in this swing bearish market, we're expecting some sort of reaction from this level, ideally to create this lower high, which will, lead to that break of structure and continue that bearish momentum. So ideally what we want to see when price taps into our sort of swing supply zone is we want to see this internal structure fail. And the easiest way that we can identify this is obviously, taking in what we've just learned about market structure and seeing where this market structure fails. So as always, when we've had this internal break of structure, we're expecting a pullback to these demand levels. And when we have a pullback to these demand levels, what are we expecting price to do? Well, we would expect price to push up and break the internal high. But what we want to look for our confirmation entry from this supply zone is the opposite, actually. So we want to see price come into this demand zone. We want to see price, have some sort of reaction from this level, but fail to break that high, fail to make that internal break of structure. And instead, what we want to see price do is make this change of character to the downside. And now this change of character works the exact same as a break of structure. It's just sort of breaking the expected order flow. So it's obviously, a bullish market changing to a bearish market, or a bearish market changing to a bullish market. So obviously in this example, we have our internal bullish structure, Demand is being respected, we've got higher highs, higher lows forming, but then price taps into our supply level, comes back into our internal demand and has failed to create that higher high. Instead, it's reacted from some sort of level of supply within here and now given us a change of character, as we can see here, and I've just marked out for you guys. And another important thing we can mark out now is actually our failed reaction, also known as a flip, and our failed reaction would be this red line here, which I mark out as the failed reaction. And the reason this is a failed reaction is because price has come down into our demand level within our internal bullish structure, and we were expecting price to break that high, make a break of structure, make that higher high, but price has failed to do that. It's failed to take out the high, and it's instead now actually flipped bearish. And another important thing to note with this change of character and failed reaction, and it was what I was sort of touching on earlier when I was discussing the series of demand mitigations we had within this internal structure, is that when we have this occurring within a pullback, it can work as a sort of inducement for the zone. So when people are seeing this internal structure, there'll be a lot of people taking buys from these demand levels, trying to play that internal structure. And as I said, these demand levels are going to be mitigated. So what we'll often see is once price has made this change of character, all the people getting involved here have sort of created liquidity or inducement, whichever way you want to describe it. But this means that once price is ready to make that change of character, we're going to see a very strong reaction, as there's not going to be any levels of demand. There's going to be no sort of buy orders left within these demand levels. They've already been mitigated. The people who were getting involved in these areas who had buy limits on the top of these demand zones, they've already been tagged in. So when price comes back into these zones again, there's not going to be any demand left there. So this is where we're likely to see price sort of smash through these levels. And this isn't, a necessary thing to see. It's just an additional confluence that can give you a bit more confidence when getting involved in these trades. And yeah, just something to keep in mind when you're looking at these types of setups. So now we've had our failed reaction and change of character, we want to be getting involved in this. Obviously, this is the first sort of sign we have that price may be ready to continue this swing bearish leg. This is the first sign that this point up here that's reacted to this supply zone could be the lower high forming. We obviously won't know that until we've had that swing break of structure, but it's a really good sort of indication that price is ready to continue this swing bearish leg and make that break of structure, form that lower low, and confirm this reaction from the supply level as the lower high. So to get involved, the best place we can look for is a flip zone. And a flip zone, the best way to describe it in this example would be the area where supply has clearly stepped into the market to overpower demand. And for this example, the flip zone that we would look for is this area here that I'm just marking out. And the reason we mark out this zone here is because we've had that, we've had the internal break of structure, price has tapped into our supply zone, it's pulled back into our demand zone, we're expecting price to make that higher high, but it fails. It's reacted to some sort of level of supply within that internal structure, and we've now got that failed reaction where it's broken through that reaction point within the demand zone, and it's also given us that change of character. So there's going to be a very strong level of supply resting within this zone that has caused these two sort of structural breaks, first the failed reaction and then the change of character. So we can look for price to pull back to this level, and if price does pull back to this level, it obviously doesn't have to, although it seems to sort of happen a lot in the markets, at least when I've back tested this and done it in live markets. So to get involved in this, all we need to do now is set our sell limit, and we just wait for price to sort of come back to this level. We don't need to look for any more confirmations. You can obviously jump down to lower time frames once price comes into the zone and look for another confirmation entry, which would be the exact same as this setup, just on a lower time frame. So for example, if you're looking at this on the M15, the 15-minute time frame, you might then want to jump down to the 5-minute, 1-minute time frame once price comes back into this zone. But for the sake of this example and for my actual live trading, I am more than happy to set my sort of sell limit on this supply zone. And as you can see from this example, we would have our entry on the flip candle. We'll get into a bit more detail later about whether you want to refine this to a candle, to the whole range, to a fractal possibly, so like a wick or something. But we'll get into that a bit later when we're going through some live market examples. For this example, I'm just going to take the whole sort of supply zone that we marked out, and you want to put your stop loss just above. If you want to be a bit more conservative, a bit more safe, you can put your stop loss above the high of the point that reacted from the supply, but typically in the live markets and in this example I would just put it above the high of that flip zone that we're entering from. So in summary, we've got our swing bearish leg, price is pulling back towards our supply zone. It's created some nice internal bullish structure with a series of demand mitigations which has worked as liquidity or inducement for the actual supply zone above. Price has tapped into this supply zone. We've had our failed reaction where price has come into our demand zone and failed to make this internal higher high, and we've now had our change of character where price has broken through this internal higher low. So this is where we get involved. This is, you know, where we hopefully make our money. As I said, we've got our entry on the flip zone, stop loss just above, and then it's just a question of waiting. And if things are going to go the way we plan, they might not always. No strategy is ever going to be 100% win rate, no matter what anyone tells you. It's bullshit if they tell you that. Don't listen to them. It's never going to be 100%. You can add some extra things like the inducement I was talking about to work as extra confluence, which will hopefully improve your win rate. But no matter what happens, you're never going to have 100%. I'll just make that very clear now before people start having a go at me in the comments going, oh, I've taken this in the live market, it didn't work. It's not going to work every time, but if you can back test it and refine your sort of trading plan for it, I'm certain you'll be able to make a huge amount of percentages from this entry confirmation alone. Obviously paired with some higher time frame analysis, market structure, etc. You're going to have a really, really high probability sort of proven edge in the market. So price is pulled back into our supply zone. Our entry has been tagged. You normally want to do this before you've actually been sort of tagged into the market. You always want to know where your targets are before you're even entering a trade. But for the sake of this example, very easy target level you can be looking for is that lower low that we had from this whole swing leg, because we are in this bearish market. We're expecting price to make that break of structure, form that lower low, which will establish this sort of entry position as our lower high. So this is a really good sort of strong area that we can take some profits from. Could be your final TP, could be your first TP. You may want to be looking for higher targets based on higher time frame analysis as well. But as I said, for the sake of this example, to keep it simple, we will have our target at that lower low, expecting this bearish momentum, bearish order flow to continue. And yeah, this is going to work as a very strong level of sort of inducement as well for the trade. As we said, we had a lot of inducement or liquidity, whichever you want to describe it as, building up with the series of demand mitigations within our internal structure. And as I was saying before, I sort of touched on this very briefly. When we've had these series of demand mitigations, very rarely are we going to see any sort of large amount of buy orders left within these demand zones. They've already been mitigated. The people who have had buy limits on these zones, they're already in their positions. So there is going to be nothing left within these zones to stop price just smashing through, as we can see from this diagram. And this is pretty much the ideal entry confirmation that I look for in the live market. Hopefully that makes sense. If not, obviously drop some questions in the comments. I'll be more than happy to go through it in some more detail, go through some more specific examples. But the next thing I'm going to do is I'm going to take you through some live market examples. I'll take you through a bearish example and I'll take you through a bullish example so you can see what each of them look like in the live market. So guys, I've just pulled up a chart of EU. This is on the 15-minute chart, and as you can see, I've rewinded price to Tuesday the 15th of November 2022. And seeing as the example we just looked at was a bearish example, I thought I would take you through that in the live market first. And so yeah, I'll just show you how I took this trade in the live market. This was a trade I took on my funded account, and yeah, it's a very simple trade. It's all done on the 15-minute time frame. Usually in my live trading I'm changing between time frames. I'll jump down to the M1 specifically for my entry confirmations, but I thought I would use this example as it's a really clear example of how you can use this confirmation entry on just one time frame, on pure just market structure, SMC price action. And yeah, I'll take you through that now. So the first thing I'm looking at is what type of trend are we in. And the first thing as I can see is price, made this strong impulsive move to the upside. We had a small pullback and then a break of structure to the upside, which you can see I've marked out here with this blue line. We've retraced, reacted to some sort of, demand in here isn't the clearest at all. But price then made another break of structure. We had a pullback into this sort of origin demand that we were looking at in the previous examples. And then, price has made another break of structure to the upside. However, if I can get that in, there we go. However, price has left a very large wick up here, which could suggest some sort of liquidity grab. Also suggests that, all of the buyers that have come in have sort of lost momentum, and we could start to see some sort of, sell pressure from, some sort of supply within this zone. I'm, not going to the higher time frames now because I'm just trying to keep this as simple as possible, but it could be that we've tapped into some 4-hour supply, daily supply, something like that, which has caused this sort of reaction up here. So if this is our break of structure, we're up here, we follow price back down, where's our low? Our low would be down here. So we can actually see that price has just now flipped bearish with the break of structure here. I wouldn't actually count this first candle as a break of structure because I want to see a candle closure below, but we have now got this break of structure here, and yeah, we'll just see what price is doing. As I said, we've got our higher high up here. We're possibly going to form a higher low down here somewhere, but I want to see a significant enough pullback before I mark out that high low, just so I know we've got that real swing structure in mind. So yeah, I'll just let price play through a little bit. And as we can see, price continues to come down. We're getting small pullbacks, but for me, they're not strong enough. This is all still part of the one swing leg that we are looking at. And I'm waiting for those sort of larger pullbacks, which I'm still waiting for now. And as we get this here, this is where I'd start to say we've got our swing pullback starting. We've had these bricks of structure to the upside. We've flipped bearish, and we've had this one, strong leg to the downside. And, now we're starting to get this bigger pullback now. So this would be our lower low. I'm not going to mark these out just now, but hopefully you can see that would be our lower low, and this would be our high point of the whole trade. When we're looking for areas of supply to take trades from, a lot of you might be looking at this wick here, and this is completely valid, especially if we have swept some liquidity up here, tapped into some higher time frame supply. But for me personally on this trade, I was identifying this candle here. And the reason I chose this candle as an area of supply is it's the final candle that got engulfed. As you can see, price came up, we had this large wick to the downside, very small body of a candle, and the next candle completely engulfed this candle. And these are the type of levels of supply that I like to see in the market. Suggests that a strong amount of supply has stepped into the market, and as you can see, after this has happened, we've got clear bearish candles that have caused this break of structure down here that we just identified. So as with the previous examples, I've marked out this area of supply that price might react from, but we don't want to see price just come straight back into this zone, as that's quite aggressive. We'll get that V shape I was talking to you about, which is a sign for volatility, and that may make the zone a bit less high probability to trade from. So we want to see some sort of internal structure form. As you can see down here, we actually had a small retracement candle here. Price then broke the low again. So what we could do if we want is we can mark out some internal structure where this would be our high, and price has now broken above that. I'll just change that to my M15 internal, and you can see we've got a very small break of structure to the upside. So our swing is bearish, but our internal is now bullish because we've broken this small little high here. Not the most significant, but it's the type of thing that I'm looking for in the live markets now, to really help me, give me that extra confidence when price is retracing. So we'll just have a look and see what price can do. I'm not going to identify any of the other supply zones we have here. There are some valid supply zones you could trade from, but this is the most high probability supply zone for me, and this is the sort of area we're looking to trade from for this specific example. So as you can see, price is coming up. We're having a small little retracement here. This would be our internal retracement in our bullish internal structure. Price is still retracing, and then we get that break of structure here, which would be our internal break of structure in this bullish market as we were talking about. And this is just the type of structure we want to see. As I said, we don't want to see a really strong V retracement back in, as that's a sign of volatility, a sign that a lot of demand has stepped into the market to give it that momentum. And yeah, we'll just keep playing it through. We've got our bullish internal within our bearish swing internal. As you can see, price has now come down into this origin demand of our internal. I'm not going to mark in all of these, but hopefully you can see that. This would be our origin sort of candle that caused this break of structure. Price has come in. If this bullish internal is going to continue, we should break this high up here. We'll see what happens. As you can see, price messes around for a little bit. Wicks above, I wouldn't count that. And then we finally get that break above. As I say, I always want to see a candle closure above because wicks can often imply a sweep of liquidity. So once we get that closure above, that is, now I'm happy to class that as a break of structure. That would be our new higher high, our higher low, internal would obviously be down here. And yeah, we'll keep playing. So as I said, price is now tapped into our zone. This is when we can start looking for shorts possibly. If you want to be really aggressive, you can just look for a risk entry, place your order here, stop loss above. But it's not something I would necessarily recommend. In the live markets now, I would probably be jumping down to my M1 time frame to look for some confirmations. But for the sake of this example, I'm just going to be sticking to the M15 to make things sort of as simple and clear as possible. So we've still got our bullish internal. Price would have to break this point down here to flip bearish. Still quite a long way for price to come to, and obviously it might come further into this zone. We don't know, we'll have to see. As you can see, price is small retrace and it comes up, wicks the high, not enough for me to call it a break of structure. Still doesn't close above there, and then we finally get that close above just now. So this is where I would then be marking out my break of structure. So we've still got that internal bullish holding with the break of structure we have here just now. So this would now be our higher high up at this point, and our higher low would obviously be at this point here. And this would be the point we'd be looking for price to break, to have a break of structure. But if we're looking for a change of character, which I classify differently to a break of structure, change of character would actually be this inside, well, it's actually not an inside bar, but the small retracement candle we have here. As you can see, price has come up, it's wicked, it's come down, failed to break that high, and then we've had that move that's caused that break of structure. So if we're looking for a change of character, I'd be looking for this low to be broken right here, and we'll see what price does. So if price is going to continue this internal bullish structure, what we would expect is, price to retrace to some sort of level of demand within here, react, and form that higher high. And as I was saying, for a change of character, I'm, more than happy to be a bit more aggressive. I don't need to look for a sort of internal break of structure always, because the low would be down here, but we've actually got a nice sort of retracement candle in here. And if I mark that out as an area of demand, it's actually a very strong flip zone as well, because price has come in, it has broken the high, but it's failed to close above, it's come down, and then we've had that strong move that's closed above and caused that break of structure. So this would be a nice flip zone for me to look at for price to come into, to possibly react from and continue that internal bullish structure if it's going to. So we'll just see what price does now. Price continues up a bit, comes down, retracing slightly, so it's tapped into our zone now. Is price going to continue that internal bullish structure? Possibly. However, we know we're in this strong area of supply, we're in this bearish swing leg, so we are expecting price to continue this bearish structure. Price may react from this level now. Doesn't look like it is. We have a decent reaction here, but very large wick suggests that we're not going to push up and make that break of structure just yet. We come a bit further into the zone, which is interesting, and we get a nice reaction here. So maybe this will be the point where price will come up and make that break of structure and continue this bullish internal structure. But as you can see, price actually ends up having a strong change of character. As you can see, if you're classing this as wick breaks, it would be that first candle that broke through. However, if you want to look for candle closures, it would be this sort of third candle that's finally closed below. And this is just an extra way of having extra confirmation. If you want to be aggressive, you can look for wick breaks and changes of character. I personally do in the live market because I'm more than happy to be sort of more aggressive looking for changes of characters. But if you want to look for closures below or above, it's just an additional sort of confluence, give you more confidence that that change of character is going to hold. So now we've had that change of character, what do we look for? Well, we look for the flip zone where supply stepped into the market to overpower demand. So as we can see, price came up, we had that higher high, it's pulled down into this demand zone of this nice strong flip zone. Price has failed to create a higher high here, it's come deeper into the zone. We've failed to create a higher high again, and we've actually mitigated this sort of supply wick here, which is quite nice. And that's when we can clearly see that supply has stepped into the market. Yes, we did have some large wicks here, but we finally got that closure below, which suggests some strong supply. So this is where we can start looking for our entries. And as I was previously saying, if we just look at the market structure, we've had this break of structure to the upside. Price has come down into this demand sort of flip zone we identified. It's failed to create that higher high. It's come a bit deeper into the zone, and again we failed to create that higher high. And what's actually quite nice as well here is we've mitigated the supply wick as well, and then we can clearly see that this is where supply has stepped into the market to cause that change of character. So to identify our flip candle, you can obviously choose to do the whole range, the whole buy to sell range, which you would take from this candle just here, and obviously cover the high up here. But for me, I usually like to refine it to the actual candle where I can see that supply clearly stepped into the market. So that would be this candle here. As you can see, every candle after this, continued that bearish sort of structure. And as I was saying, you would set your entry literally on the low of the candle, and you can set your stop loss just above. And for the sake of this example, we will have that, if I can get it, at 12 pips. In live market conditions, depending on your broker, you may want to add a bit more room just for spreads or whatever, but for this example I'm just going to keep it simple at 12 pip stop loss, as you can see. And before we're ever in the trade, the next thing we want to do is look for targets. The easiest, simplest target we can look for within this M15 bearish structure would be this M15 low down here, as we're expecting this market structure to hold. And if this market structure is going to hold, this bearish market structure, this low is likely to be broken, and so we'll call that in a 11 okay, just slightly above 11R trade, pretty much, a little bit over, but with spreads and commissions it'll probably be 11R almost exactly. So price is beginning to pull back towards our zone as expected, hasn't quite tapped into it yet. But what this can actually do is be a sort of small area of inducement before, so you might have some early sellers getting involved here. Hasn't actually tapped into this zone that we're looking at. This is where you just need to stay patient. Don't try and start getting involved here because you think you've missed the trade. You've got to trust your analysis, stick with your entry that you have. If price moves away, doesn't tap you in, that's fine, but don't start taking some sort of trades based on FOMO, fear of missing out. You just got to trust your analysis and stick to it. So we can see price even breaks that structure, internal structure again, but the zone we're looking at is still more than valid, and we can wait to see if price comes back. As it does, price literally just taps in by a few pips. Very nice. We get a nice little rejection wick as well, and this is where we can just start playing out the trade and see what happens. And I will slow this down a little bit because it's actually quite fast, but I will just stretch this along a bit. I'm not going to go into how you can manage your trade. I could do that in another video at a later time if you want me to. As I've said in my previous video, I think my first video, I said I normally take 20% partials at 4R so that I'm running risk free and I don't have to move my stop loss to break even in case price wants to retest our entry zone. But for the sake of this example, let's just say you've got your fixed target down here and that's all you're looking for, your 11R target, and we will just let price play through. As you can see, it's messing around a little bit. There are lots of other trades you could be looking to take within this zone. All of this internal structure, as we see, we're now in a bearish internal structure. Price is messing around. Price actually comes up to this origin, nice rejection. Price is coming back down. We're now retracing. That's what we expect after breaks of structure, and we'll just keep playing this through. I'm just going to click through because it's going quite fast on my 10 times. Change it to 3 actually, then we can have it play through. But yeah, this is where you've just got to be patient, trust your analysis, and sit and wait really. As we can see, prices come up, mitigated this area of supply up here. I'll just pause that quickly. So that we had this leg down here, price came up, mitigated the origin supply up here, actually retested that again, maybe arguably swept some liquidity as well. So that's a very strong zone to be looking from. We could identify this, whole, final buy to sell candle, and as you can see, prices come up, wicked into there, given a strong rejection, and we would expect this internal structure to be broken And the interesting thing now is that our internal structure and swing structure are now aligned, which is another good confidence that price is ready to continue that swing structure. So we will keep playing this through and we will see what happens. Just move that along slightly. As you can see, price is still messing around. We haven't had that internal break of structure yet. That's where we get that internal break of structure. We've come close to our, and there we go. So price finally hits our target for 11R, and as you can see, we've had that M15 swing break of structure down here now. Lots of internal structure that we could have looked at for other trades, but for the sake of this example, it was very simple. We had a strong bearish leg to the downside. Internal structure switched bullish to facilitate that pullback that we're expecting. We had identified this supply zone that we expected price might react from. Price came into the zone. We had that change of character. Didn't need to be a internal break of structure. We're more than happy to look for changes of characters of small pullbacks, especially flip zones like this, which should have strong demand in. Price came into this zone, failed to react, came a bit deeper into the zone, again got our second failed reaction, and we looked to enter off that candle here because this is where supply clearly stepped into the market, and then we had that strong change of character. Also interesting is that we actually did have that internal break of structure here before price came up, which again suggests it's just extra confluence for this zone. Not only did we have that change of character, failed reaction, we also had an internal break of structure. So just extra confluence. Price tapped in really nicely, and yeah, the rest is history. I'll just say this trade would have been opened on let's have the time, about 4 o'clock on Wednesday the 16th of November 2022, and it would have finally closed out the next week, so you would have actually had to hold over the weekend, which I don't normally do, but for this trade you can see it worked out really well. Monday the 21st of November at 4:30. So if you want to pull this up on your own chart, go through, see if you can identify exactly everything we were looking up. That's great. So guys, that wraps up the video. If you found that useful at all, as always, be sure to like, leave a comment and subscribe. Equally, if you have any questions or if you'd like me to go over a bullish example in the live market, be sure to let me know in the comments. And as always, as I always say, be sure to follow me on Instagram and to join the Discord server. Cheers guys, have a good day.